Hi guys, Ben here and welcome to Motivation to Invest. Vanguard is one of the world's most iconic investing platforms with over $5.3 trillion under management. They are the largest provider of mutual funds and the second largest provider of ETFs or exchange traded funds, just after its gigantic rival iShares, which has over $7.3 trillion of assets under management. This is across a globally diverse selection of asset classes, from stocks to bonds to commodities. Now, although these are both great investment companies with an incredible selection of funds, many investors want to know which is better. So in this video, I'm going to compare and contrast the funds offered by these two companies across three main criteria: price, performance, and selection. Let's dive in.
Coming in, flex, I just wanna win.
Welcome back to Motivation to Invest. Before we get started, go ahead, smash that like button for the YouTube algorithm. That allows us to continue providing you with free valuable content like this. I post videos every week on stock market investing tips and strategies. In addition, I post stock pick videos on stocks that I personally have invested in myself. So if that's something that you want to keep updated on, be sure to hit that subscribe button and make sure the notification bell is turned on. That way you'll get updated when these future stock picks are at tremendous prices. Now let's get into the video. So what is an ETF? Well, an ETF is basically an exchange traded fund, which is a fund which can be traded just like a stock. Example ETFs could be those which have a selection of stocks which track a particular segment of the market or index. These are the index fund trackers, such as those which track the S&P 500. The beauty of ETFs is it gives the investor exposure to an asset class in a diversified, easy and low-cost manner. So with that being said, let's dive into the first fund to compare. Number one on my list is the S&P 500. The S&P 500 is an index which tracks the top 500 largest market cap companies in the USA. This includes the tech giants such as Microsoft, Amazon and Facebook. Right guys, so diving into the S&P 500, we're first going to look at the Vanguard S&P 500 ETF or VOO. So looking at the expense ratio, we can see it 0.03%. So that is the ongoing charge for holding this fund. Comparing that with the iShares core S&P 500 ETF, we can see that they have an expense ratio of 0.04%, which is slightly higher, but it's only 0.01% difference. But that's 1 point for Vanguard on this particular fund. Checking out the performance. So we've got performance overview here. I'll ignore the year-to-date total return because that's due to short-term fluctuations. 3-year daily return total, 9.16%. Let's check out the iShares core, 9.17%. So slightly higher, 0.01% higher over 3 years, which is fairly minor. Checking out the 5-year return, 9.08%. 5-year on the iShares, 9.05%, so slightly higher for the Vanguard. Checking out the holdings. Now both of these should be tracking the S&P 500 as best as possible. So if you look at the sector weightings there, of course you've got Microsoft, Apple, Amazon, Facebook, Johnson & Johnson, Berkshire Hathaway, Visa, Procter & Gamble. So these should be very, very similar, if not the same. And that is why we're seeing very similar results. So the main way of differentiating between two different funds is looking at the fees. So there's slight variations, but there's not a massive amount of difference into it. If I can get this one here, maybe I can compare it a little bit better for you. So, I've got the Vanguard here on the right, and I've got the iShares on the left. This is just looking at the sector weightings. So you can see the Vanguard's 0.04% extra on basic materials. That's fairly similar. slightly more on the iShares towards the financial services industry. Trying to look for substantial differences here. There's quite similar. So yeah, very, very, very similar. Very, very similar. So similar performance. On this particular fund, the Vanguard is actually slightly cheaper. Only 0.01% cheaper than the iShares. Now, a positive here for the iShares platform is it does have a greater selection of funds in general. So iShares even has an iShares S&P 500 growth ETF. So looking at the expense ratio, 0.18%, it's a substantially higher expense ratio than the core ETF and also the Vanguard core ETF. So you do pay more, but check out this performance. So over 3 years, it's averaged 14.3% return over 3 years, which is fantastic. And over 5 years, it's averaged 12.14%. Whereas the core ETFs tracking the S&P 500 only averaged approximately 9%. Now, if you take into account the fees, it's still probably 2% higher, easily 2.5-3% higher than the core ETF from Vanguard and the core from iShares. So that's just something interesting to take into account, the greater selection of iShares. Number 2 on my list is the FTSE 100. The FTSE 100 is an index which tracks the top 100 largest market cap companies in the UK. This index includes a variety of stocks, such as banking, oil, and pharmaceutical giants. So diving into the Vanguard FTSE 100 ETF, or VOOC, we can see that it's got an expense ratio of 0.09% for its expense ratio, comparing that with the iShares core FTSE 100 ETF, 0.07%. So slightly higher expense ratio for Vanguard. So that's 1 point on the cost for iShares on this particular fund. Let's check out the performance. So 3-year daily return minus 5%. Of course, there's been a lot of crashes recently. So 3-year return for iShares is minus 2.82%. So the iShares fund actually seems as if it's less volatile. Let's check that over 5 years. So 5-year return, 3.05%. Looking at the iShares, only 0.74%. Okay, what about 10 years? 4.32%. It's not got 10 years on here. Interesting. So it looks as if over the past 3 years, the Vanguard FTSE 100 ETF has performed worse than the iShares core ETF. But on balance, I would give this point to the iShares core ETF due to its greater performance over the past 3 years and the fact it's got a lower expense ratio, just 0.07 compared to the Vanguard fund of 0.09%. So that's 1 point for the iShares. Number 3 on my list is the FTSE 250. These are the 250 largest companies in the UK, just below the FTSE 100. The idea behind investing into the FTSE 250 is that smaller companies tend to have better growth potential. As the old saying goes, elephants don't gallop. And by investing into the FTSE 250, you have the potential to achieve great growth. However, this does come at a cost of increased volatility. Right guys, diving into the Vanguard FTSE 250 ETF. It says it's currently got an expense ratio of 0.00%, which could mean it's less than this number, which is why the rounding is not showing. So let's check out the iShares FTSE 250 ETF. It's got an expense ratio of 0.4%. Checking out the performance. 3-year daily return total, minus 5.94%. Compare that with the iShares. minus 4%. So Vanguard's got a better 3-year return. 5 years, 4.86%. 1% there. So I'd say that's a point for Vanguard there, definitely. It's got a better expense ratio, which would be lower than this. I don't think it's completely zero, but it's definitely lower than this figure. So it's got lower expense ratio and greater performance. So that is a point for Vanguard. Last on the list, I'm going to compare international funds from both the Vanguard and iShares platforms. Which platform offers the best funds to be globally diversified? Right guys, so diving into the international funds, some of the best funds are those which track the Morgan Stanley Capital International or MSCI World Index. So a couple of the funds which do this, you've got the iShares MSCI World ETF. Now this is the only fund which directly tracks the MSCI World Index, with approximately 63% of the fund invested in the US, with its top 10 holdings including Apple, Microsoft, Amazon and Facebook. The top 5 international countries in the fund, which comprise of approximately 25%, are Japan, the UK, France, Canada and Switzerland. So diving into the fund here in more detail, it has an expense ratio of 0.24% for this fund here, World ETF. Checking out its performance, 3-year daily return total 5.08, 5-year return 5.18%. So as you can see here, looking at the totals here, some years, 2019 it was up 28%, 2018 it was down -8%, 2017 it was up 22%. So certain years you would have got great returns from this fund. And due to its global diversification, it offers less volatility. There's its top 10 holdings: Apple, Microsoft, Amazon, Facebook, Alphabet, Johnson & Johnson, Nestle, JP Morgan and Chase, mostly US companies there. Now the Vanguard Total Stock World ETF does not directly track the MSCI World Index. It actually benchmarks the FTSE Global All Cap Index, but it does have a close correlation to it, making it a very accurate proxy. This fund invests in over 8,100 securities worldwide, with approximately 58% of the portfolio invested into North America, with Europe at 18.5% of the portfolio and the Pacific at 13%. The fund began in 2008 and has an average annual return rate of 5.97% since inception, and an expense ratio of 0.09%. Comparing that to the iShares fund, it is substantially cheaper. So in terms of, I will give this one to Vanguard because it's substantially cheaper, just 0.09% for a globally diversified portfolio. Another great thing about Vanguard is their selection of life strategy funds. So diving into the Vanguard life strategy funds, you can see it's got a variety of different types here, from the lower risk, low reward funds with 20% shares and 80% bonds, to 40% shares, 60% bonds, and then that obviously increases to 100% shares, 0% bonds, which offers greater returns but also greater volatility. This has an ongoing charge of just 0.22%, which is incredible given that this is a globally diversified fund. 3-year price and performance of 10.91%, which is incredible and beats both of the world indexes by iShares and Vanguard. Looking at the funds that you get when investing into this fund, obviously on the UK Vanguard platform, you get the Vanguard FTSE UK All Share Index as approximately 19.5% of the portfolio, the Vanguard US Equity Index is 19.4%, the Vanguard Developed World ex-UK, the Vanguard S&P 500 ETF, the Emerging Markets, Developed Europe, FTSE 100, Japan, Pacific excluding Japan, and the FTSE 250. So you get all those funds in one simple investment, which is incredible. And it's such a low fee, the 0.22%, which I think is fantastic. From the numbers, it's clear to see that iShares offers the lowest cost funds for its main core ETFs. However, I did notice when you start investing into the more obscure and alternative ETFs on iShares, the costs do rise. My reasoning behind this is that you pay more for the greater selection over Vanguard, as Vanguard doesn't allow you to invest into certain asset classes such as commodities or real estate, especially not on the UK Vanguard investor platform. However, a major point for Vanguard is that it does offer its Vanguard Live Strategy funds. These globally diversified off-the-shelf portfolios are ideal for a beginner investor, and their rock-bottom fees make them also the most cost-effective. In addition, the Vanguard platform offers a great user interface, which makes it ideal for beginner investors. iShares, however, is slightly more complex when you're trying to find out information about certain funds. Also, to invest in iShares, you must invest using a broker. My recommendation is one of the free trading apps, such as Trading 212. I'll leave a link below in the description where you'll get a free share worth up to £100 when you sign up. Overall, whichever ETF you choose depends upon your investing goals and budget. I would recommend Vanguard for their simplicity and core funds, and iShares for their low-cost funds and great selection. Vanguard also has a major point for its life strategy funds. So what's your favourite platform, Vanguard or iShares? And which ETFs do you like the best? Comment those thoughts below. If you enjoyed this video, go ahead, smash that like button and definitely subscribe. See you next time.
Coming in, flex. I just wanna win, LABB who we running with, coming in, flex. I just wanna win.